but without further ado, Jeff Brooks, take it away.
Okay, well, thank you, Sebastian. Again, my name's Jeff Wood. I'm a loan officer at HomeStreet Bank. I've been with HomeStreet Bank now 23 years, and I'm part of the Affinity lending department that is part of your benefits at the University of Washington. And I'm having Brooks Glenn with Windermere Real Estate join us today, kind of talk about his portion of what to look for when buying a condo. So we're going to have kind of both the lending side and the real estate side of things with buying a condo. And so there's a lot of information that we're going to go over. So what we'll try to do is do a Q&A afterwards, but we'll also share our information at the end and talk about if you need to reach us at the end of the class, we can kind of talk about that as well. So I'll share information on that and just talk about the discounts that you receive as an employee at the University of Washington. So kind of go to the next the slide here. So what we're going to do is talk about just going to go through the table of contents. We're just going to talk about buying a condo today. Kind of the definition of a condo, the pros and cons of ownership with buying a condo over a single family residence, kind of the differences between those, what makes purchasing a condo different, the different financing options and information. We'll go over a quick first-time home buyers checklist. We'll kind of run through that. It's just kind of nice to kind of get that information out there and reintroduce it. We'll talk about some homeowners costs that you're going to have buying a home in general, buying a condo in general. There's some things you have to get prepared for. We'll kind of talk about that. And then we'll also talk about resources that you have, again, as a UW employee and what we offer with our different services here at HomeStreet through our real estate agents such as Brooks as well. So we'll talk about that today. So again, we'll talk about buying a condo, and it's a little bit different than a single family residence. And there's some nuances that you have to take into consideration before looking at buying a condo, and why we're looking at buying a condo, and why it's more attractive in some cases for some buyers, and why single family might be more attractive for other buyers. So there's different times that we want to do maybe buy a condo over a home. So each person's different. So we'll kind of cover those. So a different definition of buying a condo. What is a condominium? So most people know it's a structure, a building structure. It's divided into several units. Sometimes you get condos that are, excuse me, single family units that are zoned as condos. So, but they're single family residents, but they're still condos. So that whole unit is a condo complex. So you have to kind of know what you're looking at when you're buying homes. But again, a condominium is typically a structure divided into several units on one piece of land, and it's surrounded with common areas. So you have different common areas that you share with the owners of those homes. And now it's different than single family homes. We'll kind of talk about that with the pros and cons, but a lot of times the ownership and the common areas is a lot different than if you owned your home with your property. So we'll kind of talk about that here in a sec with the pros and cons. So the pros: location. Why condos become very prevalent, especially in high density cities, Seattle. So you can get more people living in the smaller or more tight urban areas and locations closer to where you work. So you have a shorter commute. You want to be in the heart of the city. You want to be close to work. You want to have those restaurants. You want to have the sporting events. You want to have the arts. You want to have everything close by, but you don't want to spend an arm and a leg and get the land as well with it. So with the condos, they're an opportunity to get in and not have the full amount of all the property and everything tied into it. They're more affordable. So condominiums have a wide price range. They're typically more affordable within the market. You can find a lot more options by living a little bit closer to work. It's a lot better sometimes with the first-time home buyer budget. Cons with owning condos: when you buy a condo, you don't own the land beneath the building. You simply share an interest in it. So you have an interest with the land. You own the space between your walls and your unit. So you own everything in there, and then the common areas are owned within the confines of the condominium itself. Resale condominiums are more sensitive to trends in real estate. So a lot of times you'll see them go down in downturns. And they're usually the last ones to recover in downturns. So you see a lot of times where the prices of condos might go down a little bit faster than single family houses. And so that's where you want to kind of keep an eye on what, with the condo market, why you're buying a condo over a single family house. A couple other things we want to look at for pros. Security, having neighbors around us makes it a lot easier to lock up and leave for vacation for extended periods of time. Their buildings are often have really good security features within. They may have guard service, just depends on how many amenities your condo has. So you want to look at that when you're buying your condos. So if you have guard service at the door or something like that, it's a little more security. It's helpful, especially if you have it as a second home. Some people use condos in the city, commute on weekends, things like that. So other low maintenance condo living means someone else takes care of the common areas. You don't have a lawn to mow. You don't have a lot of the upkeep that regular homes would have. So it's kind of nice with low maintenance. Next part, some of the cons to community living. Shared walls and common areas means you're likely to hear neighbors. So you have somebody above you, somebody below you, somebody next to you. That's the downside of some of the bigger condo units. Part of the condo association, you have to coordinate with your neighbors and decisions regarding your common areas. So you want to be careful on what you're looking at, your common areas, if there's a lot of upkeep. The other con is fees, monthly HOA dues. They go towards maintenance and repair of common areas, your outside areas, your roofs, your siding, all the just the general repairs and upkeep of the building. So you want to make sure that the building is taken care of well. You want to go through their meeting minutes. You want to go through and see, okay, are they taking the steps to make sure you have enough money in your reserves to cover things down the road, to replace roofs, replace siding, to fix things in your common area that may get beat up with more and more use or just with weather hitting it all the time. So there's a lot of things you want to look at. One thing I do notice with condos with HOA dues, they do keep increasing. A lot of times HOA dues, they never usually go down. They always go up because there's always something that they need to cover. And with prices going up, so are the condos, HOA fees. Again, some more pros to condos. Many condo developments offer a range of amenities in the common areas. You have workout rooms, swimming pools, tennis courts, gyms, guards, like we talked about before, doormen. And so you want to take a look at that and see if those are amenities that you want to have within your condo. Sometimes they do cover your utilities, different utilities too, your garbage, your sewer, your water, some things like that. So it just depends. Look at what your HOA covers, find out what that entails. So sometimes your HOA dues might be high, but there might be a reason for why they're so high. Next, condo association. Every unit owner is a member of that association. So you want to see who's on the board. You want to you can be active within that board. You want to look at the bylaws. You want to again check the maintenance on it, repair issues. You can look at the meeting minutes and see, okay, is there complaints about certain things? Are you buying a certain unit and you know that neighbor's into the neighbor's sitting there and one of the bigger complainers on the meeting minutes. So you can look at different things like that and just kind of go through the information of the condo minutes from their meetings and see, okay, this is something we need to be kind of cognizant of. Other parts of condos that I get a lot of customers that really don't like are the rules. Condos are governed by a set of CC&Rs, covenants, conditions, and restrictions. So they can restrict things when you're buying a condo. So you have to read through those and make sure, is that something that you want to be a part of? Because I know with my first home was a condo. I bought in there. The biggest dog I could have was, I think, 15 or 20 pounds at the time. So I never got a dog, obviously, because they're usually a little bigger than that when I have a dog. So there's things that they can restrict: noise levels, pet ownership, renovations. So if you want to do something to the home, you got to be careful what you can and cannot do. It may restrict you on the kind of curtains you can put up, or things that you can put on your windows. So you want to be careful, read through that, make sure the restrictions are fine. Like even HOAs are not in condos. Sometimes you have HOAs in neighborhoods and they restrict the color of your house or what you can do with fencing and things like that. So read through those covenants and make sure it's something that you want to get into that building with. Also, because the association is made up of homeowners, some are ran by homeowners, some are run by property management professionals. So you want to check and see if it's run by management professional companies. Usually if they are, that's when your dues are a lot higher. Because when you get into the condo, everybody's like, oh, we're going to have the owners run it. It's great when you say that, but a lot of times you don't get the volunteers because it's all volunteers that are part of the board. So you want to see if it's run by a management company or by the homeowners, if it's being run efficiently or not. So a lot of times you want to make sure how it's run and if it's something that you want to be volunteering for. When you go to get that approval to get something done with your house, is that something they're going to do? So we'll kind of talk about what makes a purchasing condo a little bit different. Before we get into that, Brooks, was there anything you wanted to add to the pros and cons about buying a condo? I know I was kind of running through that pretty fast.
No, you actually covered the main issues. The
Okay.
one main issue of that I get from most buyers, they're pet owners. That is one of the main things. I'm a pet owner. I have 2 pets. I have 2 dogs. I have a larger dog, smaller dog. And when I'm working with clients, my first question is, do you have a pet and what kind? And before we even go see the property, I'm calling to see if that association allow pets. So that's a huge issue. The other one you talked about, HOA costs at times do rise. They try to make sure that there's a healthy budget. The other one, someone just said if there's a rental cap. So
Yeah.
these are all the things that we look at when we're out having this wonderful experience looking at condos. We keep in mind what's most important to you. So those are the things: the rental cap, the pets, and then also if it comes with parking. Sometimes when you're in a more condensed space, they may have one parking space available, and so that may be helpful. So you've covered a lot of the things there, but these are the things that I see often with people: is it parking, pets, and the cost, and
Yeah.
can we rent it out in the future?
Okay, and I'm going to cover the rental cap here pretty soon. That's
Okay.
kind of in the next considerations as well. So, and so with condos, we're going to talk about considerations. And so you want to take a look at the condo itself. Is it a new condo? Has it been established? Or was it an apartment complex that was converted to a condo complex? So you want to look at that. We don't see as many condo conversions anymore. We saw quite a bit in 06 to 2006 range. We saw quite a few apartments turning into condos because they were running out of space for building. So they turned apartments into condos. We don't get as many anymore. But the big thing right now is with communities, if they're new or established, the established ones you want to take a look at pretty hard. How are they approved? And we'll talk about the approval here in a little bit about which programs that we want to look at as a lender for buying a condo, because it isn't just cut and dry anymore where I could say, oh yeah, you have this credit score, let's go with this program, you're approved for Fannie Mae 3% down, Fannie Mae 20% down. There's a lot more goes into buying a condo now. We can't just go and say, oh, I'll do this program and this program. Sometimes they won't allow certain programs, and I'll cover why in a moment. But if it's new, sometimes it's harder to get the approval done because maybe it's not fully sold out yet. Maybe not everybody's bought a home. So we usually have to have a certain concentration of houses sold before we can start lending in there with Fannie Mae or with conventional financing, because they might not allow it until more houses have been sold within that complex. Because what they did in years past, again, they would sell the homes, get all the buyers in there, and then suddenly, oh, we can't sell anymore. They turn it into apartments and they start renting it. And so now you have people that own in a condo complex that have rentals. And so they're just renting from the builder, and the builder now owns a lot of those home places, and so it drops down your value, so you can't sell down the road, and it turns back into an apartment. So you want to be careful on some of those with new communities that have just been established. So and then earnest money agreement, that's kind of weird that they'd put that in there, but earnest money agreement, when you're making the offer on the house, this is anytime you're making an offer on a house. It depends on where you're making an offer. Every county, every city can be different, but it can be anywhere from $1,000 to 1% to 50,000 to $100,000 for your earnest money agreement. It's your good faith that you're going to buy the property, that you're going to do your due diligence, get your loan approved, get ready to buy that house. And as soon as your house closes, then that earnest money goes to your down payment and your closing costs. You don't lose it, but it's sitting there in the event that you get approved all the way down the line. There's things that protect you as you go through, and your agent will protect you, your loan officer try and protect you as much as possible through that purchase process to keep your earnest money safe. But they go through each, then the home inspection, the neighborhood inspection, financing contingencies, things like that will protect you on your earnest money. So you get to the point where, oh, wait, I got declined for the loan, you can get your earnest money back. Now, if it's something where you get down to closing, you're like, I don't want to buy this house, I'm going to buy this one instead. You could lose your earnest money because you're just walking away from the purchase. So you want to be careful. The earnest money is something that you have to have a check. You have to write that, goes to escrow, gets deposited in escrow. That money is being used. It will be used for your down payment and closing costs down the road. So when you close, so that's something you don't lose. It just sits there until you close the loan. But you do want to protect that as you go and keep the process moving. The homeowners associations, you want to look and see how long they've been established. If it's something they just opened up, are they collecting enough? Is $100 for HOA dues? That's really cheap. Why is it so cheap? Maybe they just got it established. They don't know they're supposed to be collecting more. So you want to be careful of that. Your dues are also factored into for qualifying for your home. So if I'm going out and buying a $500,000 home or a $600,000 home, and I want to put, I want to get qualified for that. Let's say a $400,000 loan and your house is $500,000. You're qualifying for a condo would not be the same typically for a $500,000 condo with $100,000 down, mainly because your HOA dues are factored in. You have your property insurance and your taxes, which are on condos and on homes in most cases. But with HOA dues, will actually be considered into your payment as well. So it could reduce what you qualify for. I've had couples that were going and trying to buy a house, again, the $400,000 range, but they decided, well, let's do a condo. We want to do a condo. Well, they only qualified for $300,000. So because those HOA dues were so high, it reduced what they qualified for. So you want to be careful when you're qualifying for those to make sure you qualify with HOA dues. And you want to check with values between units. So again, if you have a ground floor unit, might be different than a top floor unit. So the values between those can be considerable. If you got a view condo opposed to somebody that has a city view, or if it's an interior view. Let's say you have a courtyard view and you don't have an exterior mountain view. So there's different things you want to take in consideration with your value of the unit itself. They're not always the same, even though it's a 2-bedroom, 2-bath. One might be considerably higher in value compared to somebody that's on the first floor with no view and has a lot more traffic involved. Also, intended use. Owner occupieds typically have preferential pricing within condos. A lot of times people use condos as their first purchase, and then they rent out the condos. And this is what we're talking about, rental caps. So owner occupied, most condo complexes want owner occupied condos because they increase in value a little bit better and they're more taken care of. With investment condos or rentals, you get a lot of renters within a community. It can bring the value down of the whole complex, but it can also hurt the approval for the next buyer. So if you get too many rentals within a complex, it could actually keep mortgage companies from doing loans on that specific complex if you have too many renters in there. Because let's say you have over 50% renters within your complex out of about 100 units, they might not lend in that complex anymore. So you want to be careful with that. If you have FHA approvals within a complex, you can't have too many FHA loans within the complex as well. So there's a lot of rules within financing that we look at if it's owner occupied or rental, and we look up that information to see if it's something we can do the loan on there because of how many people are in there. So that's why they do the rental caps. So if you're looking at going in and buying the place, and then moving out and renting it and buying another place, look and see what their caps are, what their percentages on rentals, because they have to agree to let you rent that. Otherwise, you have to stay as owner occupied. So going to the next one. So buying a condo with financing options. I kind of talked about this a little bit. Let's see, we got one more. Okay, just a comment. Okay, so the next part is just financing options. So it really depends on the complex. If it, like I said, if it's established, if it's something that's been there for a while, if it's been something that's a brand new home. So down payment requirements are different for each type of loan. But we do as low as 3% down for conventional financing, 5% down, 10%, 20% down, but we can do as little as 3%. And some of our down payment assistance programs will help with 3% down as well. But that's typical with Fannie Mae loans. The other part is with Fannie Mae, we have to do a spot approval and do an approval with the condo to make sure that, again, the reserve requirements are met from the HOA, that they're collecting enough in there for future maintenance. So a lot of things they do is review future maintenance on financing. They want to look and review, see how many renters they have in there. They want to make sure that there's not too many renters. They want to make sure that owner occupancy is higher than typically 51%. They want to look and see if there's any concerns with the structure itself. The biggest one that's come since they had the collapse of the condo in Florida. I don't remember which county or which city it was, but they had the condo collapse. And that condo had a lot of deferred maintenance. Well, Fannie Mae is stepping up and saying, hey, if there's deferred maintenance, we're not going to lend in there until you prove you've taken care of the deferred maintenance. So if there's a lot of deferred maintenance on a condo, sometimes Fannie Mae will step back, or conventional loans will step back and say, we're not going to finance in here until you get this fixed, or you start collecting more money for that complex. So that's where you want to be careful if you're getting into a complex with a lot of deferred maintenance, because they're going to start doing special assessments where they say, okay, every owner has to pay $50,000 because we need new roof, or we need the foundation fix on this because it's not up to code. And so the new owner might be on the hook for that if you're buying into it and the seller is trying to sell before that special assessment is set up. So you want to be careful with that, and look and see what's coming up, because and that's part of the buying process and the due diligence of looking up the information on your condo if they have special assessments coming up. Typically, if they do, a lot of times the sellers are going to pay those before they sell the house. And so it's worked into the transaction. So you want to be careful, make sure it is covered before you get in there. Because you don't want to sit and pay $500 in HOA dues one month and then find out, oh, you're going to add another $500 a month to that for the next 100 payments or 10 years to pay off the special assessment. So you want to be careful with that to make sure you're not borrowing into something that you can't afford down the road. So again, I talked a lot about conventional loans, but we can do FHA loans as well with a lot of condos, but we have to make sure if they're FHA approved or VA approved with a condo, because if you're a veteran, we can do VA loans with a lot of condos. But some FHA financing might not approve condos just because they have not kept the FHA financing, condo financing up to date. So sometimes they won't take FHA financing. We can do spot approvals with those as well now with FHA, which is really nice. But some places the HOA doesn't want to deal with FHA financing, so they won't work with them. I've only had it a couple times where I've had an FHA buyer want to buy into a condo, but they already had their concentration of FHA buyers. I think I've had it happen twice where they could only do FHA financing for a condo that they were buying. And so they had to back out of this one deal because they already had 20% FHA loans in this complex itself. So sometimes we can't do it because they have too many loans in one place. Again, I talked about newly constructed condominiums. A lot of times we have to have a certain pre-sale amount done before we can lend on those. And so a lot of newly constructed condominiums are pre-sold using a preferred lender. So a lot of times if you go into a new condo complex, they might have their own preferred lender and sometimes you have to use those preferred lenders because of that, because they can't get financing for those units until they're all sold. I find that a lot. And sometimes with down payment assistance, it's the same thing. We have to use certain programs, certain people to do those condos because they are tied to the down payment assistance, and only certain banks will do the loans for the down payment assistance. I do that a lot with Habitat for Humanity in their condos, because a lot of the new construction in Seattle for Habitat are newly constructed condos. So they have a waiting list, they have their buyers go in, and they have to meet certain requirements for condominiums. Next part is closing costs. So yes, you have your down payment. Most everybody's like, oh, I got my 3%, I got my 20% down. But a lot of times they forget about closing costs. There's closing costs with the loan. It can be anywhere from 1% to 3% of the purchase price. So depending on if you're buying points or not. And points, a point is typically 1% of your loan amount. So if you have a $300,000 loan amount, 1% or 1 point is $3,000. So buying your rate down for 1 point would be $3,000. Now, it's not common where you have to always be buying down points, but with closing costs, that's one of the things that's in there. You have closing costs typically have some companies will charge origination fees. HomeStreet does not charge origination fees. We have points where you pay points to buy the rate down for the life of the loan. You get an appraisal. Appraisals are we do an evaluation of the property to make sure that that appraisal is similar to homes that have sold within the last 6 months to your condo to make sure it's at the right value. We do title insurance, escrow fees. Escrow is who's a third party that will guarantee you are the buyer and you're buying the house and you're buying it from the seller of the home. They make sure they collect all the money and all the documents are all signed, and then record your information with the county. That's what the escrow's job is to do. Title will guarantee that there's no liens on the property besides your mortgage liens in your name. So there's no clouded title. So you own that house. Nobody else will own that house based on title. So those are the main things, and you record with the county. So those are kind of the main things that we do with closing costs. Now, condos, they do usually collect 2 months of HOA dues up front. So if your condos are $450, they typically will have $900 in closing costs that will go into the HOA coffer. And so that will go into there, pay 2 months. And there may be condo fees for getting the information that is requested from the condo. That can range from $150 up to $450 to request information from the condo to make sure that it's we see if they fill out a checklist to make sure that we can approve them through Fannie Mae or FHA financing. So there's a lot of things that go into the background that you won't see, but with the closing costs, those are kind of the main closing costs that we have, besides property taxes that we do collect as well at closing. Okay, so next one. Well, can I go over the first time home buyer checklist? What time? We have about 20 minutes or so to go. So I'm going to go through this a little quicker just with the checklist, just kind of give you an idea of kind of things that you want to do as a first time home buyer, getting ready to buy your first home. If it is a condo, if it's a single family residence, if it's a townhome, a 0 lot line townhome, and the real difference between a condo and a 0 lot line townhome, mainly you own the land on those. It looks a lot of times like a condo, but you actually own the land all the way up in the building itself. Sometimes they are attached. So in Washington, you just have to be careful. Sometimes it's a townhome, sometimes a condo. Your agent will help you kind of know the difference between those. So it's a big, there's some definite significant differences between those. And then one other that you may come across that HomeStreet does not do loans for is co-ops. You'll see some co-ops, and a lot of times, co-ops by the price, because co-ops are very inexpensive compared to a condo. They may be a lot lower in value based on a regular condo of the same size. So if you see co-op, a lot of times we can't do it. There's certain lenders that do co-ops as well. So, but to get to the homebuyer checklist, this is just kind of the things you want to kind of keep in mind when you get started for your first purchase. Take advantage of classes, take advantage of your financial education, We have free online courses. We do monthly classes. One of our loan officers, she teaches monthly here at our 2 Union Square building in Seattle, but there's classes all over Washington State. They are free to go to. But you can contact one of us, one of the loan officers. We can get you directed to the right class if you want to do online or in person. In person's 5 hours. Online is basically at your own speed. That's usually about $50. The ones in person are free. We do other online financial education through the UW as well, and they could probably have that in their archives. So get as much information as you can because it does help. But the next part is get pre-approved, pre-qualified. Go in, talk to your loan officer because you don't want to go out and search the internet and say, oh, here's the house I want. It's beautiful. And go and try to make an offer on it because it'll probably be gone that day or within a week and not know if you're approved for it. I've had customers that have made offers on homes with agents and they come to me after they have the house under contract and I pull their credit and I can't approve them for it. That is the toughest thing to see. I don't get it as much anymore. Usually everybody's been pre-qualified before we send them out. But sometimes you get a few people that have gone out, made an offer, got under contract, and they don't qualify for the home. So you want to make sure you qualify for the house that you're buying. It's huge. So just make sure you go through the information with your loan officer. And typically what we need is, if you're a W-2 employee, we need 2 pay stubs. So 1 full month of pay stubs. If you're a teacher or work for, have a family member who works for companies like Fred Hutch, they pay one time a month. I do need 2 pay stubs for those companies or for teachers, because they get paid once a month. I have to have 2 pay stubs. Copy of the most recent investment accounts or bank statements for 2 months, all pages. So it's anything that you're using for the loan. So if you're using your down payment and your closing costs coming from retirement, I need the last quarter statement that you're getting from your retirement. If it's something you're getting as a gift, we have gift letters that we can send you. Family members can gift you the money. We just have to prove that they are a family member and they're giving you the gift. I've had it, partners that have given us gifts. I've had other godparents give the gifts. So sometimes we just have to know the relationship. We just have to know how the relationship exists if there's a family connection on there. You can't just, I've had lost aunts do it as well, but not to get on a huge tangent here, but you just have to make sure there is typically a relationship with that gift. But we look 2 months back on your accounts for checking your savings investment accounts. So if you have mattress money, we have customers that in their culture, banks are not trusted. So they don't keep their money with banks. I have a sister-in-law, she doesn't do that. So you want any money that you want to use for that down payment, put into your account before 2 months before applying. So I'll say that just now, because we will verify anything within 2 months. If you have a huge deposit of $10,000 and that's going to go to your closing and we can't verify where it came from, I cannot use it. So anything that's going to be in there, you want to put that money into your account and have it seasoned for at least 2 months. Now, gift funds, if you're getting gift funds from your aunt, your parents, and it's being transferred in this month, that's fine. That's where we do a paper trail. We show a copy of the check. We get the gift letter signed and they say, I'm giving you this money to buy your house. We want it as a gift, not a loan, because if it's a loan, I have to count the payment against you. So we don't want loans. We want to just say it's a gift. Even if you have an agreement with them in the future, like, oh, if I sell the house or refinance, I'll pay you back. We don't want that information. It has to be a gift in our eyes. So next part, W-2s, copy W-2s for each borrower for the last 2 years. So 2022, 2023. Usually that's used to show that you've worked or had a job in the last 2 years. So we can show that you have a history of working. If it's at a couple different jobs, that's fine. We just have to show that you have a continuous work history of the last 2 years. Self-employed borrowers, we typically need 2 years tax returns. A lot of times we'll need K-1s, we'll need full tax returns, we'll need profit and loss statements. So there's more that'll come with tax returns and self-employment, but we need profit and loss because most self-employed borrowers are not going to have their taxes done right now for 2023. So we'll use a profit and loss statement for 2023. And so we'll take a look at that. So that's kind of the main documentation that we need for most buyers to get started. After that is when you want to find the real estate agent. With a real estate agent, you'll see real estate agents, you'll see realists, you'll see realtors. There's different associations that they belong to, but the main thing is real estate agent. It just depends on what organization they belong to, or what other I'm blanking on the arrangement, the associations that they're tied to. So you want to talk to your agents, but you want to conduct your interviews in person or over the phone, talk to them, get comfortable with your agents. And I'm going to defer to Brooks on this for a little bit, but get to know them, because you can be working with them from 1 month to 1 year, or even I work with some of my real estate agents buying my houses for quite a few years. So do you want to add something to that, Brooks?
You covered it. I am a realtor and a realtist. I'm a part of the National Association of Real Estate Brokers. I'm also I'm part of the National Association of Realtors, and I'm a licensed broker with Windermere Real Estate. And to really get to know your broker is very important, because that's the exciting part of, we get to find out where you're going to live. We get to talk with you, figure out what's most important to you and your family and what you really want. And then we get to go out together and find that home. And it's a process. And there's some highs and some lows. And so we walk through it. So it's really important that I personally and other brokers establish a really great relationship with you to really understand what you want, so we can help you find that for you and your family.
Okay, thank you, Brooks. Yeah, and so you want to talk, you get your approval done, and then talk with us if you don't have an agent, because a lot of times we have great referrals for agents that work in our program. And again, I'll talk about that towards the end. But again, we don't want to take you away from the real estate agent that you might be working with before you come with us, because I don't want them taking us away from you when you're doing your loan with us. So we try and keep it mutually respectful that way. So just keep in mind, just talk to us. But again, you want to feel comfortable with your loan officer, you want to feel comfortable with your real estate agent. So it's a team that you put together. So you want to kind of make sure that they're all talking with each other, getting the letters out, making sure your offers are all taken care of when you're making those offers. So next part we kind of talked about, but you go out, you find your home. Your real estate agent can make your initial offer on your behalf. You can negotiate terms. Really depends on the market, depends on what the market is dictating at that time that you're making those offers. If you can ask for concessions, or if you have to go above asking price, or if you have to, if you need to ask for closing costs, what you need to do. So there's a lot of things to go in where your realtor, real estate agent talk to you, your loan officer, figuring out what you need to do to get this deal structured. So you get the house, and the seller's like, well, this one stands out. I want to get this house. I want to sell this house to this buyer. So there's a lot of things you can do to kind of help yourself in getting that approval. And so one of them is getting your edge over to other buyers, is getting that pre-approval through your lender, and also having it underwritten. So what I do is the next step is push all of your information over as if you're buying a specific property, but it's a TBD address. And we vet that file as if you're buying a house for 500,000 or 700,000 or 1 million with 20% down, whatever the purchase price is. We put it in as if you're buying that house, and the underwriter signs off on it. I have the letter signed by our underwriter. That's good as gold in most cases. When you're making offers, people are like, okay, I don't even need to see the financing on this. They've been signed over on it. So depending on the lender that you're using, some lenders like HomeStreet, we do have a good reputation with buyers, with sellers, and sellers agents. And so they may take an offer that's approved by the lender, by the underwriter, before they take somebody that's got, okay, here's 20% down. They may qualify because the loan officer signed the letter. And unlike the underwriter signing off on the approval, it makes a big difference. So just keep that in mind. So if you want to get that stronger approval, push a little bit more to get that underwriting approval. Next part is a home inspection. You want to get the home inspection. Sometimes in a competitive market, people waive their financing or they're not financing, they waive their home inspection. A lot of times people will do a pre-inspection. I often recommend doing the pre-inspection if you're going to waive your home inspection. At least make sure the basics work in the house, especially the older homes. If it's a really old home, make sure the sewer is scoped. Make sure you look at the house, make sure it's not falling apart. You just want to make sure that it's not going to cost you more money down the road once you get into the house. Home inspection, if it's not a really competitive market, is a great idea because it's cost you $400 to $500 to check the house out to make sure things work. They're not going to tear into walls, they're not going to tear up the floor, but they're going to see if there's water damage. They're going to see if water's penetrating the house. That's the biggest thing up here in the Northwest. Water getting into the crawl space, water getting into your attic space, into your roof. You can see the stains on the ceiling. There's things that they look for, and a good home inspector will find those things. They'll see those things and make sure the outlets are working. They make sure the plumbing's working. Any of the appliances you're buying, they run those, make sure those work. So it's well worth the $500 to have them come in and inspect, and take a look at the house. So once you have the house accepted, you want to let your loan officer know. I've had customers that have been under contract and they don't tell me. So let your loan officer know right away, because we can lock in your interest rate the day you get the offer accepted. So we can take a look at your interest rates from that day you get the offer accepted. So keep that in mind. You want to let us know right away, get us a copy of that contract, because our rates do change on a daily point. And also, let's say you made a competitive offer and you want to close in 3 weeks. We need to get moving on the appraisal as soon as possible. So give us a purchase sale agreement. We'll go and get that moving. We order all the stuff and kind of get it going in line. So once we get your purchase and sale agreement, then there's a lot of things that happen in the background. You kind of just sit there and wait. We may ask for new stuff. We may need some things from you, updated pay stubs, updated bank statements, things like that, gift letters filled out. It's a great time to shop for homeowners insurance. I don't want to sound like a Geico commercial, but a lot of times if you have car insurance, check with your car insurance and your homeowners insurance to see if you can bundle and get a little better discount. I know the insurance agencies right now are really cracking down on home buyers, and some states are even, they're not even writing new policies for new homeowners, just because they've lost so much in those states. California and Hawaii are two of them that I've heard of. Washington's becoming a little tougher to get insurance because some of the companies are pulling out of Washington too, I've heard. So get those quotes, take a look at them. It does pay to shop, look at a couple different options. HomeStreet does have a HomeStreet insurance agency that we broker through 8 different companies. They're a great resource to use. You can shop them with Geico, Progressive, Liberty Mutual, whoever you use. USAA has great rates a lot of times if you're a veteran or a family of a veteran member, or family of a veteran. So take a look at those, get those quotes in with your car and your home, see who has good coverage. Also compare the coverages. If one's really beating them in price, find out if that coverage is the same as somebody with a $750 premium to $1,000 premium. Make sure the coverage is similar. So if the coverage is really low, maybe the $1,000 might be a little better premium because they're covering a lot more. So take a look at that. It's a great time to look at it. Loan officers can help you go over that as well. If you have a hard time kind of picking between the two, we can kind of see what makes sense a lot of times and help you make more informed decision on that part. Once your inspection's complete, this is kind of out of order a little bit, but once you've done your home inspection, after you basically said, I'm buying this home no matter what, that's when we want to order your appraisal. I don't want to order an appraisal until you know 100% you're moving forward, basically, because that's when it starts costing you money. So once we order the appraisal, that could be $700 to $1,000, depending on the appraisal, how soon we need it. It could start costing you. So if you back out, we have to pay for the appraisal that we just had done. So you would be charged for the appraisal. So if you backed out of the deal after the appraisal's gone, that is one fee that does get charged to you. Similar to home inspections, home inspection is something you do have to pay for at the time of home inspection. or the sewer scope or anything that you do with the inspection process. And this is also, once you've signed off on the home inspection, typically the first 6 days, unless you have the inspection contingency pushed out a little bit, that's when the earnest money is deposited as well. So when you're in mutual. So a lot of things happen in that time. But the next part is it kind of jumps ahead. Once we get your appraisal in, make sure it's at value. Then we can usually push your loan out to docs. So we have to have you signing your documents and closing your loan. So I get a lot of mixed questions on closing and signing. So if you're signing your loan docs, is usually a couple days before closing. So if you're signing today, which is Thursday the 15th, and you're closing tomorrow, February 16th. So today's your signing date, tomorrow's your closing date. So you want to usually sign a day before closing or sooner. But before you sign your loan documents, we're going to send out what's called a closing disclosure. The closing disclosure is something that we'll send out 3 days before you can sign your loan documents. So if you signed it on Friday or Monday, you can sign your loan documents today. So last Friday, let's say you had your loan your closing disclosure signed, it basically gives you a whole layout of all the fees that are being charged, the bottom line, what you're going to be coming in with closing, minus your earnest money. And so let's say you had $50,000 that you needed to bring in. It'll show you the bottom line. Okay, I'm bringing in $49,950. And so you're going to have to get a cashier's check or a wire transfer. Typically, most escrow companies are doing wire transfers now. So you're going to have to wire that money prior to Friday. So you probably will have it done before Thursday to get that money wired in before your closing date. So you need to do it 1 day before, at least, of your closing date. So with that closing disclosure, once you sign it, you have a 3-day period you have to wait before we can send out loan documents to have them signed. So once you sign the closing disclosure, that starts the timeline. And then let's say you signed it on Monday, we can sign your loan documents on Thursday, you close on Friday. So we have to get the rest of your money into escrow. And one of the biggest things right now is fraud with your escrow, wiring your money to escrow. Make sure you're speaking with somebody at escrow. You're not just answering some unsolicited email saying, oh, you need to send your escrow, the rest of your escrow money to us by this time, or you're going to lose the house. Things like that sound urgent. Step back and find out who's calling me, who's emailing me, telling me I need to send in earnest money, or not earnest money, I'm sorry, the final closing figures for my money. Because a lot of wire fraud's happening. So you want to talk to escrow, get their wire instructions from them directly, and get that money wired to them directly. Don't just go and answer some unsolicited email saying, send me the rest of your funds for your down payment here. Because if you do that, it might not be the escrow company asking for it. It could be a spoofed email where they're saying, oh, here, send us your 5% down. We need that at escrow right away. That's a huge red flag, because you're never going to send 5% or a certain percentage of your purchase price to escrow. It's going to be an odd number. It's going to have closing costs, down payment, funds, minus your escrow money. So they're going to give you a detailed breakdown of what you need to put in. Don't just answer unsolicited emails or phone calls of people saying, wire your money to me. It's a huge red flag. Talk with your loan officer, talk with your realtor, and don't wire the funds unless you know for sure you're speaking with escrow and who you're going to send the money to. So that's a huge red flag, just to protect your money until the last minute if you can. So you're going to sign your documents a day before closing. You'll have all your money sent to escrow the day before or the day you sign. And then the next day, what we do is we're going to take all the documents that you signed, verify all the signatures, everything is done correctly, everything's been signed. And then we're going to tell escrow, okay, you're ready to record. So we're going to wire the rest of the money for your new loan to escrow so they can disperse that to the seller and pay everybody off that has the loan and all the fees that are being paid on the sale of the house. So we wire the funds for that, and they record your name with the county that afternoon. So they try and wire it before 1 o'clock, 1:30 that day. And then recording has to happen before a certain time with your specific county by that date. And depending on how your agent works, sometimes they'll have the keys for you that afternoon once you get recording numbers. Sometimes they can take possession at 9 o'clock that night. Really depends on when you're allowed to take possession of that house. Unless you're doing a rent back where, let's say, like my last house when I bought it, I couldn't get out when I closed on my other house in time to move all my stuff out into my new house. So we had to sell our house with a 2-day rent back that we basically rented our own house back for 2 days to move out, and then they moved in. So it's not always possession the same day. So it really depends on the timing of it. If they're able to move out beforehand, which is a lot of cases, that what happens, you get your keys that evening, you move in that night, or you start moving in that weekend whenever you get your keys. So, and let's see, I think that's the rest of there. So, and then real quick, I know we're running a little out of time. We have about 5 minutes left. But new homeowner costs, we'll talk about 5 specific costs to consider. So some things you have to remember when you get your keys. A lot of times your real estate taxes are going to be taken care of in your payment, especially if you put less than 20% down. But just remember, you're going to have your real estate taxes. If you pay them on your own, you're going to have to pay them in Washington in April and October every year. So twice a year. But typically, if you have a reserve account established with the lender, we'll pay those for you. You'll still get a bill from the county. We get that as well, but it's for your information only. We will make the payment as the lender if we have your real estate taxes escrowed into the account. Other things to consider: utilities. You're not renting anymore. You're now the owner. There's things that you might not have considered. Of different things with utilities within a building. If you have gas, water, sewer, if you have a septic, you don't have sewer, obviously. So there's different things that you have that you might have to take into consideration. So look at what the utilities are. Sometimes the sellers will actually have a breakdown of utilities, what they pay on a monthly basis each part of the year on heating the house, or using gas, or using the furnace, things like that. The other one's homeowners insurance. So now you're protecting things that are in your house. So condos don't always have the insurance to cover the building because your HOA covers that. But a lot of times your homeowners insurance for a condo will cover your contents. So basically anything you just kind of take the house and dump it, anything that falls out is what's being covered typically with homeowners insurance on a condo. It's usually a walls in policy. Furnishings, again, you're buying a new house, everybody likes to have that new furniture. Just make sure you have that built and put up into savings on what you're gonna have plans for that house. And again, furnishing, it might come slow, but using new pieces of furniture later on, you have to maybe make do with what you have until you can build up the savings to get your new furniture in there. The other part, repairs and maintenance. Your homeowner inspector, real estate agent, friends, family maybe pointed out a few things that you might want to do or kind of get started with. So set up savings accounts for things you want to do for the house, get that set up, kind of figure out how much you want to spend on those, and set up your savings based on what you think you're going to want to have saved up for home maintenance or repairs or things you want to do with the house. If you're going to paint or put new flooring in, or maybe the dishwasher is not matching the refrigerator, or vice versa. So but things you want to change, and just kind of keep that list, and it usually keeps growing. As a homeowner, I think our list gets bigger and bigger each year. So so those are things to kind of be prepared for, but things do happen. So again, build up that savings as much as you can. But again, with buying your first home, if it's a condo or a house, your first priority is to pay that mortgage, to keep your credit history in good shape, make your payment on your mortgage, any HOA dues, real estate taxes. Those usually come primary for your credit history. Your car comes second, student loans, credit cards. It's kind of a hierarchy. Make sure you pay the installment that's first, keeps your credit score in a better shape. If you do find yourself in having a hard time with the new mortgage payment, we do have outlets. We use a few different places that will help you with mortgage counseling. Let's see if we have that on here. With the resources, I don't know if they have it. This is just steps of home ownership. Kind of talked about most of these, but I don't, yeah, it doesn't look like they have it on here, but let me grab it here. It's one of the American Financial Solutions. Let's see if I can hold this up real quick. American Financial Solutions is a nonprofit that we work with. They're based out of Bremerton and they have offices in Seattle. They do a great job of homeownership counseling before buying. They help with bankruptcy and foreclosure prevention. They can contact your lender if you're having a hard time speaking with your lender. Let's say they're one of the too big to fail lenders and you can't get through to somebody. They can actually help you and keep your house from being foreclosed. There's some great benefits that they have, and most of them are free. But if you do get in over your head, they do consumer credit counseling, which does cost have a fee because they pay your bills for you. So there's a lot of benefits there. But again, American Financial Solutions, they do most of their work online or over the phone. And again, you can reach out to me. I can get you their information. But they're a great resource to if you have problems with making the mortgage payment or car payments or something. Once you're in the home, something happens, you never know. So that's part of our package that we have with our benefits. But I'll talk about kind of what we do with cost savings real quick. We've got a couple minutes. But with our discount that we have with HomeStreet, it's a 0.5 point of your loan amount. For example, $400,000 loan, it's a $2,000 credit from us. We're a non-commissioned loan officer with HomeStreet, and so that's how we can pass that on. Our real estate agents that we work with in Washington, they can contribute anywhere from 0.5 to 1 point, depending on the commission they receive. So again, on a purchase of $500,000, that could be anywhere from $2,500 to a $5,000 credit. Again, depending on what the seller is contributing. We work with a lot of down payment assistance within Washington. And we talk about different programs that we use. And so I'm happy to answer that question for people. Again, financial fitness tools and resources. American Financial Solutions is probably one of the biggest ones that I like to refer out to my customers, especially if they have lower credit scores. We do free financial seminars. Besides this one, we do credit, we do budgeting, we do a lot of different things from our websites and through UW. The benefits also to your immediate family members. If you have parents or children that are going to be buying houses or refinancing, we give the same benefits to your parents, so and to your children and to your brothers, your sisters. So anybody that's tied to you as a family member, they get the benefits as well. And then only the access through Affinity is through your Affinity loan officer. So really, there's 4 of us here in Washington right now. It's Ryan, myself, Ryan Cooney, myself, Jessica Santana, and Denise Landro, who's one of our managers. So those are 4 of the loan officers that work here in the Puget Sound area. We have other loan officers within the Western US. I think that's about it. And I can pass along Brooks's info as well. If you contact me, I know that I'm kind of run out of time. Did you have any last minute things to say, Brooks?
You covered a lot. It probably would just be best if you pass my information along. One of the questions, because it was so much, one of the funny questions was, can we really purchase? And you can. You absolutely can purchase a home in Washington. It's a process. It's talking about what's most important to you, looking at your situation and setting up a plan for you to become successful. So you can absolutely purchase. So I would love to speak with one of you or all of you about how that would look.
Yeah, and I've noticed a couple of comments, but and so if you want to talk about like downsizing retirees for a condo, I've done that quite a bit for customers. And just selling your old house, buying a new condo. It's a great tool to be able to kind of crunch the numbers for somebody that is retiring and looking to downsize. We can do those and crunch the numbers on that because it can be less costly if you're buying a condo mainly to downsize, so you don't have to do the maintenance around your house. And let's see. And again, somebody's like, "Oh, You have to move to Kansas to do this. There are places that we do loans for. I'm helping somebody buy a condo for $350,000 here in Renton. So the down payment assistance that we work with, the Habitat homes that we have, if you qualify for the Habitat program, some of the Habitat condos that they have are really nice. And they sell them roughly around a $200,000 mortgage range. And the houses are valued 400 to 500,000. So there are opportunities out there, just depending on income level, and where you're looking to buy. And if you qualify for those programs, we can try and put you into those programs and get you in the right fit. We work with Habitat, we work with Homestead Community Land Trust. So there's a lot of different programs that we work with that help with the down payment assistance. So looks like we're a little over time. So again, my information is right here. If you want to is here. And if you want to contact me, that's the hotline number is the 628-0207. But if you want to email me or take my information down, I'm happy to answer any questions, pass along Brooks's information as well. Let's see. And then okay, so that looks like it's about it. So again, Brooks's info here. Brooks at KinzelEdisonTeam.com. His phone number is 206-981-7845. Thanks for putting that on there, Brooks. I was trying to figure out how to copy and paste and I couldn't do it. So again, thank you again for attending, and let me know if you have questions with the email as well. And my phone number 206-369-8939. You guys have a great day.